What happens when you overinvest in stocks? Is it possible that investors driven by hype could be making a huge mistake? Let's break down what Uday Kotak, the founder of Kotak Mahindra Bank, had to say about the dangers of over-financialization and India's changing economic landscape. Watch this video till the end as we unpack the insights shared by Uday Kotak at the Chasing Growth 2025 Investors Conference. We'll talk about the potential risk in the stock market, impact of the US dollar and Trump's tariff war, and what India should do in these changing times. First, let's talk about financialization. While it's a key part of the modern economy, Uday Kotak warns that too much financialization can backfire. Why? Because if investors don't fully understand what stock valuations are and how much they are, they could end up pouring their entire savings into the market, leaving their portfolios vulnerable if the market goes south. Other than that, Uday Kotak raised concerns about steep valuations in the stock market, meaning that prices might not be reflecting the true value of companies. This could lead to risky investments that aren't sustainable in the long run. Finally, Mr. Kotak highlights that India's stock markets are now resilient and large enough to attract foreign investment. The global landscape might be shifting, but India's markets are well positioned for growth and competition if the right policies are put into place. Now, let's talk about the Trump era and the changes it has brought to the global economy. Mr. Kotak points out that one major shift is the flow of capital. Investors are now much more inclined to hold US dollar assets, which is pushing the dollar strength higher. This means that a lot of global investment is moving toward the US, especially since US equities make up about 70% of the global market capitalization. This change in investment patterns has significant consequences, particularly for emerging economies like India. Uday Kotak believes that US push to reduce its trade deficit with India could create pressure on India's current account deficit, which is already a concern. Right now, India's CAD stands at a manageable 1.2 to 1.3% of GDP, but with the US focusing on reducing its trade gap with India, that could put additional pressure on the Indian economy. India's trade structure will need to adapt, Kotak says, in order to rebalance trade with other countries. Currently, India runs a $40 billion surplus with the US, but this could be at risk as tariffs come into play. Speaking of tariffs, Mr. Kotak points out that the US and India are already imposing tariffs on each other's goods, with India with a 10% tariff on the American products and the US with a 3% tariff on Indian goods. As President Trump's reciprocal tariffs come into effect, Kotak believes other countries will end up with a surplus capacity which they can sell to the rest of the world at a cheaper rate. This could create even more pressure on India's trade balance. So, what should India do? Uday Kotak lays out a strategy. India needs to avoid protectionism. Instead of closing off its markets, India should focus on increasing its global competitiveness. The key is to navigate this new world, he says, in improving productivity and increasing manufacturing as a percentage of GDP. The focus, Kotak says, should be on execution. Whether it's macroeconomic or microeconomic policies, India needs to act decisively. Additionally, he stresses the importance of gradual fiscal consolidation, getting the fiscal balance in order, while ensuring that India doesn't fall into over-regulation or micromanagement. So, what do you think about Uday Kotak's insights? Do you agree with his strategy for India moving forward? Let us know in the comments below and stay tuned to NDTV Profit for more.